I'm Matt Bichard here at the La Quinta Resort and Club in Palm Springs, California for REITwise 2017, NAREIT's Law, Accounting, and Finance Conference. Joining me today is Gil Menna, partner and co-chair of the REITs practice with Goodwin Procter. Gil, thanks so much for joining us.
Thank you, Matt.
Now, here at REITwise, you participated on a panel that was focused on activist investors, a topic we're starting to hear a little bit more about in the REIT space. Do you have a sense for why that sort of trend seems to be picking up steam?
Primarily capital flows. There's a lot of capital allocated to activist activities, and the REIT industry obviously is growing, very vibrant. $1 trillion in the public sector on the equity capitalization side. So it provides a likely target for activism given the amount of capital that they have. And in addition to that, we do have dedicated activists, although they don't have significant amounts of capital. We do have dedicated activists that are focused on the REIT industry as well, which is somewhat new.
And what are the main positives and negatives that result from activist activity?
In terms of campaigns, in 2016 we saw 15% of total corporate activist campaigns targeted towards the real estate industry. I would say that of the amount targeted towards public REITs in particular, at the end of the day, there are at least a handful that have produced some positive results in terms of maybe waking up a relatively sleepy organization. I would say that those are the exceptions to the rule, though, in the REIT industry, because there's a lot of transparency. And from a financial standpoint, REITs provide great information, supplemental information. And so, to some extent, with respect to activists' traditional activity, trying to get better information out to the public markets or using their own information to try to end up affecting a result, it's hard to get additional information from the REIT industry given how transparent it is.
And lastly, if you had to pick what was going to be the big story in the REIT industry as we move through 2017, what would that be?
I would like to take two parts to that question. The first would be, I think, a big story that might surprise people, and then maybe a big story that wouldn't surprise people. The big story that might surprise folks really has to do with the economy. I think if the economy and the animal spirits that we sense now are really not going to take off, and the Fed does not increase interest rates as often as we expect in 2017, I think you'll see an uptick in REITs because it'll be a defensive sort of risk-off mentality. And I think people will be surprised, and I wouldn't be shocked to see that result, and I wouldn't be surprised to see the REIT market respond very favorably to that kind of dynamic. I think that the other side, the expected side of the equation, is that people are overselling or selling off REITs too much right now. And I think that with a animal spirit, sort of risk-on environment with, in fact, some inflation along the way, we might see NOI pick up. We've seen some great growth in the industrial sector and other sectors. And that's sort of the more likely scenario where you start to see increases in guidance and a movement up in the equity market capitalization of REITs in terms of absolute value because the economy is kicking in and NOI is growing.
Gil, thank you so much for joining us.
Thank you, Matt.
For more from REITwise 2017, be sure to visit NAREITsREIT.com.